So I got a lot of feedback and questions regarding Donchian channel trading, and in this video I will show you how to use it, what it is, and how it can benefit your trading. So the Donchian channel was also used by the famous Turtle Trader group, and a quick Google search on Turtle Trader will provide a lot of important and interesting information. And in this video I will show you the different use cases for the Donchian channel. And when we start at the basics, what you need to know is that the Donchian channel is usually set to 20 periods, and what it does, it just plots the highest and the lowest point during the last 20 candles. So right now this is the current price. You can see the Donchian channel is up here and the Donchian channel is down here. And when we go back 20 candles, this is the range. So here's the range where the 20 candles start. And the lowest price point during this period was here. That is why the low of the Donchian channel is here. And the highest point over those 20 candles is here. So that is why the Donchian channel is calculated that way. If the price moves higher, the Donchian channel will shift higher as well. And this is how it is going to look like. And the Donchian channel is often and is mostly used for trend following trading. And during strong trending markets, you will see that the Donchian channel continuously shifts higher and shifts higher. And this is how it is, or this is how it describes trend trading strategies, or trending markets at least. And during a trending market, you will see that the lows are obviously also coming higher and the market is not touching the low points. And as long as the market doesn't touch the low of the Donchian channel, usually a trending market is still active, and we will see later how we can use this information. So during a strong trending price, the price usually stays below the outer band. Well, it always stays below the outer band because it shifts as soon as it touches this, and above a moving average. So in this example, I used the 20 period moving average and the 20 period Donchian channel. And you can see at the downside, we have the trend rider who complements this information nicely. So the market was always trading above the moving average. The market kept pushing the Donchian channel higher. It didn't even come close to the Donchian channel on the lower side. And the trend rider was always green here during this trending market, confirming the bullishness of this price action. And then it was not until here where the market failed to reach the Donchian channel and broke through the moving average and also touched the outer and the lower band of the Donchian channel that the trend is now likely to be over. And as soon as this happens, you may exit your long position if you have been riding such an uptrend. Those are clear signals that the market is losing strength and that the trend is likely to be over. So here we have another example that is describing this concept. So during the trending market, the price stays above the moving average. It stays here very high, and it keeps pushing the Donchian channel higher and higher as on every breakout and every trend continuation. But then it fails to reach the outer band, and it also breaks below the moving average here. So those are very, very important factors when it comes to looking at trend strength and understanding and estimating how strong is the trend really. And if you see those two things happening, it's often a good indication that the trend is likely to be over. And you can see the market then pushed into a new low. Here we have the breakout of the moving average again. The price did not reach the opposite side of the Donchian channel, which is an important tell because shortly after, the market pushed into a new low and continued the downtrend. So some traders may exit their short positions here if you have been short, but if you see that the market is not able to reach the opposite side and then fails lower, this may be used as a trend continuation because the market is not able to push into new highs. So at no point ever since here, the market was able to push into a new high, which is a very, very important piece of information when you try to understand trend momentum. And then the market kept pushing lower and lower until this point. Now it fails to reach the Bollinger, not the Bollinger, but the Donchian channel, and it breaks the moving average And the third piece to the puzzle, it is making now a higher low. So this is, or a higher high actually, because the market is pushing the Donchian channel higher, which it did not do here. So here we didn't have a strong uptrending signal, but here now we do. And then the trend continued higher and higher and higher. And all of those things came together. The failed move into the Donchian channel, the break of the moving average, and the final piece to the puzzle is that the Donchian channel shifted higher with a breakout into new high. Here the market tried to make an attempt to continue the downtrend, but it failed. The market was never able to push into a new Donchian channel low, and then the trend continuation continued. So that's a very, very important piece of information that the Donchian channels and the price action can provide us about trending markets. Here we have another very important and interesting case study. So the market traded below the moving average and it kept making lows. And the way this is often used is that there are two ways. A pullback approach would use for entries around the moving average when the price is pulling into moving average, or trend continuation breakout traders are looking for situations where the market is shifting the Donchian channel when the Donchian channel is pushed lower. The trend is continued, and some traders may use for entry opportunities on such Donchian channel breakouts. And then the trend continued. Here it retested the moving average again, but it never broke it. Here we have our final push. We have the break of the moving average. Now at this point, the market did try to break below the moving average, which it succeeded in, but it never came close to the previous low. It never came close to the Donchian channel. And then here at this point, the market shifted to breaking into a Donchian channel high. It triggered the Donchian channel, it moved it higher, then the trend continued until we have this 5 touch top. Here at this point, the market was barely able to shift the Donchian channel higher, which is an important piece of information. During a strong trending market, you will see that the market is continuously shifting the Donchian channel lower or higher without any effort. But here you can see those pushes and those enhancements of the Donchian channel are very weak. You can put a trend line in here as well. Then you have the trend line break, you have the moving average break, you have the information here that the Donchian channel breakout is very weak, and then the downtrend is here starting. So many ways how the Donchian channel may add information to your own trading. Again, the moving average is really a powerful tool that we can use for Donchian channel trading. You can see here we have the uptrend. The market shifts the Donchian channel higher very easily without any effort, and many breakouts into the Donchian channel happen. Until this point, we break below the moving average, we retest the moving average, and then here we trade into the Donchian channel, shifting the Donchian channel lower. And this is often the signal that after an uptrend market, now the downtrend is likely to get started. And this is what happens. We shift the Donchian channel lower and lower until the market breaks the moving average, until here we shift the Donchian channel upwards, and then a new uptrending phase may start. So really powerful information that the Donchian channel is providing about trending markets. So we can also obviously include Donchian channels with RSI divergences. And here during this uptrend, you can see first the market was able to push higher very easily. The Donchian channel continuously moves higher and higher until this point where the market barely shifts the Donchian channel higher, is barely able to make a higher high. And this is also confirmed by this momentum divergence on the RSI indicator. The RSI is showing us lower highs. Price action is showing us very weak higher highs. And then we have the complete collapse, the break below the moving average, the push inside the outer and the lower Donchian channel, the pullback, and then the continuation, and the trend now emerges. So those are very important pieces to the puzzle when the market is shifting, and it may improve your confidence significantly once you see that there are so many confluence factors pointing to a potential, not only a trend end, but also to a new trending change. And this may improve your analysis and your price analysis significantly. I often get asked, is the Donchian channel the same as the Bollinger Bands? And the answer is no, they are not the same, but they are very similar. The Donchian channel only looks at absolute price highs and price lows, and price ranges, but the Bollinger Bands also uses a volatility component. So what this means is that during strong trending markets, you will see that the Donchian channel is plotted here in red, is widening. You can see it here as well. And during small consolidations, the Donchian channel is contracting because the Bollinger Bands, because the Bollinger Bands is volatility based and doesn't look at the price high and low that much. The Donchian channel will never cut through price action, whereas on the Bollinger Bands you will often see spikes and actually the market closing above the the Bollinger Band during a very, very strong trending market. This is not possible during or with the Donchian channels. One way how I've seen the Donchian channel and the Bollinger Bands used is that when a trend is closing outside the Bollinger Bands and very into a new Donchian channel, these are even stronger trend continuation signals. So we see during very strong trending markets that the price is trading between the Bollinger Band and the Donchian channel. Something to explore maybe in your trading, because this may add another layer of information to your analysis. But that's the main difference between the two indicators. And that's it for this video. I hope you enjoyed it. Let me know in the comments below. I'm reading every single comment. Leave a like, share this video, and share my channel with your trading friends. And I look forward to reading your messages, and I will make a new video very, very shortly.